Hello, this is Rachel from Kalkai Media, and you are watching Kalkai Media's educational series. Please subscribe to our channel and press the bell icon to get notifications for our latest videos. So what are business expenses? These are the costs incurred for running a business. For small businesses, business expenses may range from storefront rent to payroll costs. Business expenses have an impact on whether businesses make a net profit or loss over time. It is difficult to run a company without incurring any costs. Business expenses are recorded on the company's income statement. Business costs or expenses are deducted from a firm's revenue to arrive at the business's profit or loss during a period of time. Deductions are another term used for business expenditures. So in summary, the costs incurred for running a business are known as business expenses. Business expenses are recorded on the company's income statement. Firms may categorize business expenses based on the length of period, variability, deductibility, and whether or not costs are direct or indirect. Forecasting expenses and strategically meeting them is the way to manage business expenses. So what are the different types of business expenses? Well, firms can categorize business expenses on multiple bases. One way of categorizing expenses is based on the length of the period an expenditure incurred can be utilized. In other words, benefits from some expenses incurred pertain to a single period, while some expenses pertain to a more extended period. These are termed as operating expenses and capital expenses, respectively. Operating expenses refer to expenses the benefit of which relates to a single reporting period. For instance, rent for a building is usually paid for a year and is considered an operating expense. On the other hand, certain expenses have benefits running over multiple periods. These are called capital expenses. A capital expense is an expenditure incurred to obtain or upgrade physical assets. For example, a factory constructed in a certain period can be utilized over many years. Hence, the expense will be termed as a capital expense. The other common basis of categorization is the variability of expenses in a given period. Certain expenses are dependent on the level of business operations and therefore vary with the operations. These are known as variable expenses or costs. For example, expenses incurred for raw materials are dependent on the production of final goods in a period and hence is a variable cost. On the other hand, certain costs remain fixed irrespective of the level of business operations and are therefore known as fixed costs. An example of a fixed cost is a rental expense. Regardless of the level of production in the factory, the rents have to be paid and therefore are fixed. Certain expenses have both fixed as well as variable components. For instance, in some industries, salaries fall into this category with a base salary, which is fixed, while the bonus is variable. Another categorization of expenses is based on the deductibility of expenses for taxation purposes. Certain expenses can be deducted while computing the tax payable for a business. Expenses that are ordinary, necessary, and reasonable for performing a business are considered deductible expenses. Investment losses are considered deductible expenses. On the other hand, certain expenses are not allowed for deductions and are known as non-deductible expenses. Bribes, penalties, fines, and contributions to political parties are some examples of non-deductible expenses. Certain expenses are allowed or not allowed for deductions on a case-to-case basis. Another categorization of expense is direct versus indirect cost. A direct cost is directly related to the purchasing of goods. Many businesses operate in the resale market, which necessitates the purchase of bulk stock. Anything related to the purpose will be considered a direct cost. Some other examples of direct costs include the cost of materials, freight, and direct labour wages. On the other hand, costs incurred in the day-to-day operations of a company are known as indirect expenses. They have little to do with the items that are sold. This is especially true when it comes to operating costs, for example, such as rent. Although appropriate for the operation of the company, indirect expenditures cannot be traced back to the goods. Indirect expenses can further be classified into fixed indirect expenses and recurring indirect costs. While fixed indirect expenses are fixed for the lifetime of a project, recurring indirect costs are expenses incurred on a repeat basis. Some examples of business expenses are rent or mortgage payments, also office equipment, wages and salaries, selling and advertising expenses, utility payments, office supplies, insurance, depreciation, amortization, income taxes, interest expenses, loan repayments, lease repayments, licenses, permits and royalties, commissions and fees, legal fees, equipment rentals, office expenses, and supplies. So what is the essence of managing expenses? When thinking about budgeting, cutting costs as much as possible is imperative. Every dollar saved on spending while keeping the same quality and operations consistent is a dollar of profit added to the company. Businesses must correctly identify and predict costs by carefully assessing the operations. Forecasting recurring costs and the nature of change in cost helps to maintain a stable cash flow and also achieve higher revenue targets. It also aids in accurately mapping the course of the company's future. A suitable strategy must back every expense incurred by a business. Managing expenses implies incurring more costs as long as they are worthwhile. For example, if a new marketing campaign promises to generate sales, investing money will be helpful to enhance the profits of the business. So how can business expenses be managed? Well, when expenses are appropriately managed, the risk of financial misappropriation is minimized. Overstating company costs, filing false documents, and other violations are examples of occupational misconduct that firms can prevent with proper supervision, also with regulations and controls. For proper management of business expenses, it is essential to firstly create a robust expense strategy that represents the company's needs and the needs of its managers, executives and workers. Secondly, having equitable, open and detailed policies. Also, having a simple mechanism that allows workers to file expense reports in a simple manner, and they should be timely reimbursed to avoid outstanding balances. Also, collect and maintain essential expenditure data as required by law. Have accountability run from the highest level of management to the lowest tier. And also to audit operations regularly for early flagging of irregularities. Now, if you like this information, please like, share and comment on the video and subscribe to our YouTube channel. Press the bell icon for notifications for our latest videos. For regular updates and more information, log on to our website kalkimedia.com. I'm Rachel Jones signing off for Kalki Media.